Precious metals, because today was quite an interesting day. We saw short covering coming in, and it was a weaker dollar that really spiraled the prices higher even back home. When you talk about MCX rates coming in, you had silver, which is up over 150 rupees. You even had gold, which is swaying confidently above 16,800, and all eyes are going to be on those cues coming in the international markets, expectation that they are likely to remain quite firm. But for more on the international prices, we are now joined by Harvey of Reuters live from London. Jan, hi, tell us, gold's still holding around $1,100 right now. It's at about $1,103 odd an ounce. What levels are targeted next by technical trackers?
Well, when gold moved up above this $1,100 an ounce level last month, it did move very, very swiftly indeed. It hit very little resistance on the way up, and on the way down it's encountering very little support. Analysts are telling me that the initial support level they're eyeing is about $1,060 to $1,065 an ounce. That's about $20 an ounce below where we are currently. If this level fails to hold, then there's very little keeping gold up until we reach around about the $1,030 an ounce level. That was, up until this autumn's break, higher for many months, the historic high on gold. So support there should hold for the time being, although if that breaks, then we could see a much deeper correction.
Well, Jan, if you see, it's interesting that prices have surely dipped from the record highs of $1,226 odd an ounce, but even at these lower levels of 1,100, physical buying is still very muted. Are analysts seeing the physical buying could re-emerge at lower levels to support the prices going forward?
Well, the traders that I'm speaking to in Europe this morning are telling me that they're seeing a lot more interest in physical gold after this correction that we've seen. A lot of potential gold buyers were put off by the very, very sharp move higher that we saw last month. They were concerned that they'd missed out on an opportunity to get into the market, and they're taking that opportunity now. However, the dealers that we're speaking to in India are saying that deeper price correction is expected over there, and traders there say that a lot of customers are holding out for the 16,500 rupees per 10 grams level before they get back into the market.
Well, then I'll take a cue from your answer that you mentioned that there is physical buying coming in at 1,100 odd levels. Does that really imply that gold has peaked out at 1,200 plus levels, the ones that we've already seen, and how's the next year expected to be for dollar?
Well, it's very difficult to find any kind of consensus at the moment on the outlook for gold prices next year. A month ago, the analysts that I was speaking to were overwhelmingly bullish, but now, after this correction that we've seen, we are hearing more and more dissenting voices. Certainly as we go into the new year, people are expecting prices to show some signs of a clearer direction. Many are saying that as signs of inflation emerge in 2010, and with uncertainty still surrounding a lot of the financial markets, gold prices will start to rise again, and that $1,200 an ounce level will be breached once again. However, others say that the dollar has itself bottomed out. It's turned a corner and it will continue to strengthen next year, and if that happens, then gold prices will remain under pressure.